Okay, so I'm super excited to see my friend Gina here. I haven't seen her since Austin when her and her daughter and myself had way too much fun. And we were so excited because her daughter was turning 21 by the next SFR, which never happened. And I was so excited that I was going to get to take my little sister out to the bar. And now it's been way too long. So soon, I will get to take her out. But Gina is here to answer the questions that we submitted about taxes. Now, and we had a little conversation yesterday that she is US. So she's going to do her best for the Canadian stuff. And she'll let you know if she's heard of it being any different. But ultimately, take this. And then if you have questions about it being any different, talk to your tax professional
Consult,
or
yeah, the
looking.
Canadian.
Yeah. So, Gina, do you have the list of questions there that I
I
sent you?
do.
Awesome. So I sent her all the questions that
So,
y'all sent Brandy, and then also there was someone who commented this morning, and I tagged you in that too.
mhm.
So all right, I'll let you just kind of
I'll just kind of go through them and then
yeah.
kind of
And as
give.
if you guys have questions while we're going along, like you can raise your hand on here or type a comment in the chat, and I have that up so I can watch it and let Gina know. But go ahead, Gina. Thank you so
And
much
then,
for being here.
yeah. And so, one thing just to let everybody know, I am not a CPA.
Oh, I thought you were.
I'm a tax preparer. So there's two
Yes.
different things between that. They do the numbers. They add the numbers. I put the numbers in your return. So, but it's okay. We kind of do the same with taxes. And again, like she said, a lot of these questions, people that asked were from Canada. A lot of the stuff is going to be very similar. I did Canadian taxes about 15 years ago and I stopped doing them because it just got, my business here in the US just got too big to be able to kind of counterbalance both. One of the questions was, is it better on your taxes to buy or lease a vehicle? And I'm going to kind of bounce off of this with the same question as in a cell phone that I've been asked about this also, because they went to the cell phone company and they couldn't get the cell phone in the business name. Part of that is because you are employed, you are self-employed, but you are also under Scentsy. And so Scentsy is the business. If you had, I'm gonna throw this out, say your own wax company and you contracted through Scentsy to where your business structure was a little bit higher, like an S Corp or a C Corp, then the question would be, yes, you can buy or lease and have a write-off through the business for a vehicle and or for a cell phone to where you could have that cell phone under the business name. But because Scentsy ultimately is your contractor you work for, the only thing you can do is a percentage for cell phone. And usually on my end, it just kind of depends. Like my personal aspect, I do 30% only on my percentage of the cell phone because I have our whole family underneath, our cell phone contract. So I can't do the whole family. I just specifically do under mine. If you think your cell phone you use more than that, then that'd be for you, your own discretion on that. As for the vehicle, you would only do mileage. You could do mileage or you can do actual expenses as in fuel, oil, wipers, but you can't swap. You either one way or the other. And I would say 95% of the time is going to be mileage. On the mileage also, you're going to want to track it monthly because there has been several years where IRS has allocated, for instance, like January through June, a certain percentage, and then July through December. So you've got to know you've got to know where your split is, or say like they say April and May, we're going to allow, a couple more cents a mile. So you got to know that. On that, just a little handy, these little calendars is usually what I keep to track. Of course, I have a couple different businesses. So in mine, I have a pink highlight and a yellow highlight, and I know which business for what that goes to, and that's how I track mine.
Can I just ask something about that, Gina? Sorry. So I use the QuickBooks Intuit like self-employed app. And so like I swipe right, you know, for personal and swipe left for business. Now, would I have to like go back and like, okay, in October it was up, so change that percentage, or will it do that for me in the app? Do you know?
It's not that it's the up the percent, as in like on your taxes, your tax account, say for instance, in 2018, was a year that January through June, they allowed, I think it was 53 cents. And then after the end of the year, they allowed like 58 cents. So you had to know your mileage for, you know, those 6 months. And so usually with that, you should be able to go in and say, you know, from this month to this month, it should be able to tell you the percentage on that.
Perfect. Thank you.
So, and so one of the questions is what can we write off for business wise? And then there's also what is considered a tax write-off, and what's the easiest way to track? Again, I'm not 100% sure in Canadian, but I knew in US, if you just go on a Google search, and I don't know if you can read this correctly, if it's right or not, but it's a Schedule C. And if you pull up a Schedule C, I know it's kind of, it's not going to work. I can't get it to work, but it's going to list everything that tentatively you can write off. For instance, advertising, office expense, supplies, travel, mileage, all the different categories, pretty much anything you use for your business down to a blue ink pen, you can write off. And that goes for if you do your warmer and scent of the month, you can write that off, because if you use that for, you know, business incentives or to giveaways, that's something you can write off. If it's something on that list you don't see a category, make your own little category. There is a page on the second page where you can. For instance, I have postage, I have subscriptions such as your Scentsy website that you pay monthly for that you can write off. And on the second page where I have that. Also, there is a difference between office expenses and supplies. A lot of people categorize them together. Your office expenses is going to be your pen paper. Your actual supplies are going to be like if you purchase wax for sampling, the bags to put the wax samples in, et cetera, et cetera. That's going to be the difference between those two. Another question to go on this is somebody says, I save receipts for my laptop and printer as write-offs, but I'm curious how, you know, the things you purchase from Scentsy as well, do you print those out, or, you know, how do you do that? On my end, I highly recommend you print them out. If it's receipts from the store, I highly recommend you either have a scanner where you can scan them into your computer or make copies, because receipts fade so much faster, so much faster. I mean, a receipt from 1990, you probably still got, or I still got, and you can see it. But a receipt that I just got 3 days ago, it's gone. It's already faded. I would recommend either writing them down in a book, using, you know, any kind of accounting, or now I just lost it now on the stock. There's online programs where you can keep your stuff categorized to be able to help at the end of the year. One thing that I can say that I do is and I know I'm showing, but you can't really see, is I have a manila envelope. And on that manila envelope, I have a list of things that I can write off. And you can do this monthly, which I would advise because it keeps you a little more, organized. And then at the end of the year, and what I do is I do these monthly to where I have the totals a month and I have the receipts inside. And then that way at the end of the year, I just total my totals, all my receipts and everything are right here, just in this envelope, good to go. The other thing I advise is if they make these books, I know this one's a little bit bigger with all the tabs. It's really skinny. Well, this one's a little bigger because it's for my other business, but they make, and I think this one is like a 13 tab. They make 6 tab ones, almost the size of as a half of this is a coupon book that you can easily store your stuff in and put it away. And I say put it away as in you should store them for at least 3 to 5 years. IRS can go back 7 years. Statute of limitations is 10 years. And so if IRS was ever to audit and they say, I need to see the receipts from 6 years ago, you've got to produce them or you're going to be out of luck. If you have a debit card specific to your checking account with the stuff, that will work also, as long as you kind of got it noted of what goes to the business. Let's see here. Another question down. And somebody also put, how do you properly submit them? Your tax accountant shouldn't have to see your receipts, or if you do it yourself, you just need to store them and keep them on track yourself. And that's, yeah, they don't have to see them. Sorry, let me see what the other, I know there was one more.
So to build on that one, in the past, I mean, and I'm just saying this because of people that are new, my accountant was okay with me putting together just like a Google sheet, or if you do Microsoft Office, whatever, and having categories. So I would like have a postage category and how much I spent for the year, and just bringing him that sheet and not bringing the whole kit and caboodle was fine, because I brought the whole thing and he goes, oh, no, I don't go through all that. You go through all that. You just send me the link to it and I will enter it for you. You just keep all that. Like, he didn't need to see it. He just needed like a total number. So that's okay too. So that's kind of what you're saying. Like, if you just
because again, that kind of goes back and forth. If you bring a box into me of 3 seats, your bill could be $600-700. If you just bring in that sheet, your bill's only going to be, $150. Because if I have to spend the time to try to add up those receipts and that, obviously I'm going to get paid for my time. I've been doing taxes on the computer. This will be my 22nd season. Probably about 2 or 3 years before that, I did it by hand. And I've been working for the same company. 3-4 years ago, I bought the company, so it is now mine. I've trained my clients that if you want to save $1 or more and save time, please bring in just a total. It makes it easier for both of us. If it comes down, if there's a receipt, they're like, I don't know what category to put it in. I just bring it in and then I would just add it or explain to them where in the future where they can, put that one.
Perfect. Thank you. I just wanted to kind of like build on that. So keep going. You're doing great. Thank you.
The other thing is the business use in home. Now that is where obviously using your power, you're using your internet, you're using your computer. If you have a positive on your Schedule C on your taxes, you'll be able to use the business use in home. You can go full-fledged and get the totals of everything for a year, and say like you use a 10 by 10 room for office space, then the percentage of all those bills and everything will be pertained to that office space. There is a simplified version where you would just do the business use in home square footage and it'll calculate it and stuff like that. But again, that's where it is if you have a positive still. So if you still have a profit on your business, if there's a negative, the business use in home is not going to work for you because there's nothing to take away. And so that's like, I do have some people like saying, oh, she said I couldn't use the internet. Well, it's not that I didn't say you couldn't use it. it's not being effective on your taxes to be able to use it. I'm trying to think of, sorry, I'm trying to go through.
What about mortgage interest?
That would be the same thing for business use and home.
Okay. So what happens when people pay rent?
It would be the same thing. On the business use and home, you have either rent or mortgage interest. And then you also have, like, if you are owning, paying for the home, not renting home, have mortgage interest, and there's also taxes and insurance that you can write off and stuff like that. But if it's rent, you can only write off the rent, and then obviously all the bills, you know, that you can pay the percentage of all that.
Great, thank you.
I'm trying to, that's about what I have for the questions, and kind of a little brief. I guess, again, moral of the story, anything you use for the business. I'm gonna go back to the cell phone too, because again, you know, you could say, oh, I use it for 100%. Well, if you want to, and I'm just going to throw a number out there, say like $50 a month you pay for your cell phone. And if you're ever in an audit and the IRS comes back and says, I got to see your, you know, your statements for the year, and it shows this odd phone number, and you're like, oh, that was my phone call to mom. Was that business? No. You know, so you've got to be pretty, you know, not exactly accurate, but pretty accurate with that you're not using it as 100%, unless you have a specific cell phone specifically for especially Scentsy, then that would be 100%.
If I were to lease a laptop and use that laptop strictly for Scentsy, would that still be a percentage?
Then that would be under rent or lease write-off. But again, that would have to be 100% used for Scentsy.
So best case scenario would be to divide it by a percentage?
Yes.
Okay.
Yeah.
I have a question, and I'm sorry I was late joining in, so you might have already covered this.
That's okay.
But you just give me the well-rounded thing on inventory. Like, I know you start the start of the year, you have inventory, and at the end of the year, you finish with your inventory. But can you just explain sort of the write-off on that?
So technically you shouldn't have an end of the year inventory through Scentsy. But it's pretty much anything you purchase. Well, okay, so obviously if you purchase a warmer, you're gonna get paid the commission off of that. And so that will be on your 1099 for income. How do I want to say? So overall, if you sell it, that's going to be yours. But for the inventory end of it, yeah, how do I want to say this? Because technically you really shouldn't have inventory for Scentsy. But if you are wanting to try to be, you know, really, really downright honest, and I'm not saying that for cheating, because technically if you purchase, or not purchase, but if you have, you know, say $30 credit off of a party and you get a warmer and then you sell that warmer. So technically, yeah, you should claim that as income. But in the long run, if you purchase it and sell it, it just becomes a wash. Oh, okay. That's one thing too. So, and again, for the US, obviously, because, you know, this where they implemented in, I just recently started using Venmo. I recently started using Cash App. So they are going to be sending you guys 1099s on Venmo, Cash App, PayPal, anything you use for incoming income. And if it's over $600. So at the end of the year, you could kind of freak out, because like on my end, I have I have two Square. I have one for Scentsy, I have one for the tax, and then I have another for the merchant services. And when that come in, I'm like, there is no way. Well, it's technically, it is a wash, because if you put an order in for somebody for $30 and that person sends you the $30 to pay for that order, it's a wash. You didn't really gain any money other than the commission you make off that you're going to get from the 1099 from Scentsy. Does that make sense to everybody?
Yes, thank you very much. I guess I was asking more about a business in general, not Scentsy, on the inventory question. Because on the reason I asked that is on tax returns, it'll say your inventory, and it'll say like starting inventory, finishing inventory.
You through Scentsy, my personal opinion, you don't want to do that, because you then every little thing that you have, you technically should track for income.
Which I do, yeah.
For coming in and going out.
Okay.
That would be more or less like, let me throw this out here. Say like you sell parts for a speed, like a race, for speed cars, for race cars. And if you pull in, say 20 gallons of oil, that's going to be your inventory to sell out. But that's a little bit different to where you make profit on that, to where on Scentsy you only make profit off the commission. Does that make sense?
Yep.
Anyone else have questions? Anything you want to ask while we're here? I mean,
absolutely.
There's no wrong question asked. Just go for it.
Okay, I have another one. I'm sorry.
No, you're totally fine.
So vehicle depreciation. So I know okay, so here's my question. What's the difference first between you own your vehicle, let's say you do deliveries in kilometers, but let's say you lease. What's the difference implications when it comes to tax time?
So this is where at the beginning, at the thing I say, it's the structure of the business. So you're just going to use mileage. If your structure, it's kind of that story, because you say you own your business, you own your Scentsy, you are your owner of the Scentsy, but you sell for Scentsy, you're contracted through Scentsy. Mm-hmm. To where if you were your own independent, say, wax supplier, and you contracted Scentsy to give you wax, and the structure of your business was higher up as like a S corp or a C corp, mm-hmm. That's where the leasing or your vehicle payment would come into play.
Okay.
But for the most part, you either do one or the other on your taxes. You do expenses, and that's where the lease and your fuel and your oil and your wipers, et cetera, would come mm-hmm. out, or you do mileage. And if you start one way, a couple of years down the road, you can't swap.
Okay. So I never did mileage. So that's probably why I always did my vehicle in my income taxes, was because mm-hmm. I didn't do mileage. So maybe that's why they always used that. But then we got into depreciation on vehicles. Like if you had a vehicle that you used for so long, and that's where I was confused about.
Yeah. And when also one thing too, so when you depreciate, even if it's a computer, if mm-hmm. you depreciate and then you turn around and say like you sell that computer, or you sell the car, you've mm-hmm. got to recapture that depreciation. So it's almost like all the write-offs you got for it in the 3 years prior, you come back and you're responsible for.
Okay, good to know. I'm leasing now, but yeah, I was curious about that. Okay, thank you so much. Mm-hmm.
And the mileage is on a vehicle is going and picking up supplies for your business, delivering to people for your business. If you go on incentive trips or world tour, that if you use your vehicle, even to drive to the airport or to the place of, that's mileage that you can write off.
And two, I don't know if they have it in the state in Canada, but in the States, we have two different apps. I used to use Mile IQ, which is $4.99 US, $4.99 US every month. And you get unlimited drives. So it like you don't even have to turn it on or anything. It'll automatically track where you're driving. And then all you have to do is swipe left or right to like say where your drives are going. I upgraded and I do the Intuit QuickBooks now. And that one's really nice because it attaches, it's not just mileage, it is all my purchases. So for Scentsy, I have one business account. Well, I have two business accounts, but one of them is I don't have anything attached to because that's what I put my tax and my travel savings into. So I don't have it hooked up to any cards. I have to actually go to that bank to take money out. So that way I'm not like stealing from Peter to pay back Paul, and then Paul never gets paid back because I took that tax money and I put it towards my business. It wasn't supposed to be. So I have it tied to my one account. So that way too. So anytime I spend for my business, it goes through and I swipe left or right for business stuff. So like if I'm driving and if you do miles too, you can't write off gas, correct?
Right.
Okay.
Right.
So, I'll ignore if I'm going to, we have Quick Trips around here. That's like the place to go. So like if I'm going to the Quick Trip to get gas, I don't put that. But if I'm like driving through Burger King because I'm doing deliveries all day and the whole reason I'm out is because I'm doing deliveries, then I can write that off towards a business expense, and that's travel.
And Burger King, you can write off.
Yes, that's what I'm saying. Yeah, that like Burger King you can write off, and you can write off all your miles. So the Intuit app also does that too. So it will track you, if I'm driving from here to here to here. And I try not to let it get too far away because then you start to forget, oh crap, was I driving errands that day or was I doing, so I try to set an alarm on my phone. So like once a week I go through and do my mileage, especially if I was driving a lot. But that really saves a lot of headache. And then two, I can show you here. Well, maybe I don't want to show you, I don't know. But so like the app comes up here and sorry, one second. So here's what the app symbol looks like, but it's really nice because it'll say like potential deductions for gas already this year are at $389 because I drove to Minneapolis to go out to leadership and like was driving all that stuff, and it can keeps track of your income and your expenses, and it keeps track of absolutely everything and lets you know when tax day is. So I really like this, and to have the app too is a business write-off. So the $7.99 I pay every month, I write that off at the end of the year.
So just for Canadians, reps, I use it as well. And I think I pay 11, it's like 11 something or up to $13 a month for mine. But it is great because you can enter every month all year long, your commission, what you've paid out, stamps, whatever. And then it's all ready for me at tax time to take to my accountant.
The only thing I will say that I ran into a snag with it is just because when I put in a big order, like for me and all my customers or whatever, and I pay it like they pay me cash or check, and then I pay that out on my card, I have to go back and I can't say, hey, I paid $300 for this. I actually paid like $50. So then that's just when I have to go and like hand print out those receipts or keep track that way. And then I just don't send my accountants the number of like all the Scentsy stuff. I subtract all that and put in the actual number. So I just have to be careful of that. But it's really nice for like subscriptions, everything. It's just right there. Bam, bam, bam. Swipe left, swipe right. We're good to go. And you can put it as an automatic thing. So like if they see, like if it sees a Scentsy purchase on there, it knows that a Scentsy purchase is a work purchase. So I don't even have to swipe left or right. I just set a rule and it automatically goes to that.
But just let me ask you, Molly, because I don't have mine set up like that. So you have to have a business account that strictly all your business stuff goes in, that it reads and uploads it to the account, right?
I had to, for me, just because I firmly believe in the whole what Orville tells us about not using family money for Scentsy. And it was starting to get to be a problem between like, not like my husband's money and like my money, that was fine. But it was a problem with like, okay, did these people pay me? Has that come through yet? I'm taking away from family money to pay ahead and making sure I recoup that back. So there was always a lot of just like, because Mike, if you ever take the Dave Ramsey classes, Mike is the nerd and I'm the dreamer. And so Mike is like watching our accounts like a hawk, even though he doesn't have to. That's just what he loves to do. So he would see something and he'd be like, okay, wait a second. Is that getting paid for blah, blah? And then I was over here like, I've got it under control. Stop picking at me. So I set a separate account, and honestly, it has been the best for us. So then too, when I get paid every month, I send, you know, the Scentsy pay. I put 15% back in my business for business spending. I put 20 towards that secret bank account for taxes. I put another 10 for Scentsy travel, and then the rest goes into our family account for family money.
Nice.
Nice neat.
That's one thing too, I'll just say too, because obviously because of the pandemic and stuff like that, for back to the Burger King, if you do eat and you go to Starbucks or et cetera, and it is, like you say, if you're all day out delivering sensory and it's for Scentsy, then, or the particular business, then absolutely. They changed that. So in the past, it was only 50%. This year it's going to be 100% right off.
Wow.
Ooh.
But they do have a cutoff. Like there is an amount, like 900 or something. Don't they have an amount that's a max when it comes to food and entertainment, or no?
No.
No, you just can't write off. I think you can't write off alcohol within that stuff. So like if you go out for dinner,
it's the alcohol.
I don't drink.
Yeah. Like let's say you go out for dinner and you want to like spoil your team.
Tentatively, you're not supposed to write off the alcohol.
Yeah, you can't write that aspect off.
So if you do have drinks with Scentsy friends, get a separate tab for the alcohol, and then you get a separate, so you say, can I just pay the bar? And then you go and you have your dinner and you write off the dinner and you're good.
Yep. What about gifts for your team? Are you allowed to write those off or no?
Yes. Those would be under supplies.
Okay.
And that's one thing also too. Donations. What are they called? Raffles. You're doing raffles for stuff like that. I still, even if it's like a warmer I got for free because of party things, I still do the value of what I gave to them of that warmer is what I still write off.
But do you need to get a receipt back for the donation?
No, not through the business. You can just write it under donations.
Okay, because I've done donations before, but the ones that I got a receipt back. I thought if I didn't get a receipt, which I do a lot that I just give, I thought I can't say that unless somebody gave me.
You can write it off, or you can write it off under supplies too. You know, depending on how you title it. Yeah, when it gets really particular is when you run off the donations through a Schedule A on your taxes, when you do it through personal.
Oh, okay. Okay.
Which is not something we need to worry about.
Yeah.
Okay. Awesome.
That's why it's great just to have a tax lady. You bring the numbers and she tells you where to put, like she puts all the numbers places. That's why I highly recommend everyone to hire somebody to do your taxes. If it's in your budget, do it, because that's a business write-off also. Getting your taxes done is a business write-off.
Not to mention, is it true that there's a less chance of an audit if you have an accountant do it?
No. It don't. There is one thing I can honestly say, out of the 22 years, there's been only a couple of my clients have audits, but it's not because of me.
Okay. So it is just
I've actually also been audited from the IRS that showed up my office and did a total like office sweep twice, and I passed with flying colors. So it's scary. It's scary, but when you have your stuff in order, it's good. People ask me because people always thought that IRS just spin the wheel and say, oh, if you're a baker, you're going to get audited this year. Oh, if you're a truck driver, you're going to get audited. If you're self-employed, no. They say, what do you have to do to be audited? And my work. Doesn't matter. Doesn't matter if you make 500, 500,000. It's just random and it can be audit. One thing I do tell my clients, you get a letter from the IRS, do not respond, you call me. Because sometimes the letters will go like, say, hey, Molly, there's a $500 1099 that you didn't report, you know, what's going on? And so you're like, what is going on? But technically you did. It's just the way it wasn't in the columns that they really needed to see it. And you might need to show some paperwork and it be done. It's I call them phishing letters. Because if you call them and say, oh, yeah, well, they just made their money and really there was no error. But in order to do, like I say, to an audit, it doesn't matter. You just have to work or file a return. There's no random or category as to what, why, who. It's just random.
Okay.
Good to know.
Yeah. And I can say though, if you ever do get in an audit, if you ever do, to be prepared, because usually they'll kind of flag you for a year or two and just kind of watch what's going on, but then you're clear.
Okay. Yeah. And I will say I used to do TurboTax until I finally started doing this full time. And then my husband was like, I just want to make sure that, since you're making more and this is part of, our livelihood, we should have someone do it. So I recommend, like Brandy said, getting somebody, but if you're brand new, you're probably still okay to do TurboTax if you're doing TurboTax and stuff like that. If you have questions, Gina's in the big group, you can tag her and she will get to you when she can. This is getting her busy time. So she'll do what she can. But, you could tag me or Brandy or Allison too. And we're happy to answer any,
And that's one thing too. Even though I'm like, no, I want you to come to me because I'm going to make that dollar off of you. I do recommend people. I'm like, if you want to use me for a year or two, just to get it established kind of look, and then you can go on your own. I have had people do that and they've come straight back to me a couple of years later because they were like, it was too much. Because if you don't know of a credit, if you don't know of some stuff, you're going to be out. There's years ago, people didn't realize you could write off for washing of your work clothes. IRS allowed $1 per day. That's $365, $366, depending on the year. People didn't realize that. And that was a legit thing. They stopped doing that. I know that, but again, that was a little extra bucks that people didn't realize where they could,
Get it.
That's
so
awesome.
You can't take off, like in our thing, you can't take off, like even in the tax office, I can't take off my work clothes because I can wear them out in public. My husband works with the refinery and stuff like that, and he has to have FDR clothing that it's really specific on some stuff, not all of it, but some of that I can write off because he is not to wear those in public, and they're more or less for that specific thing. But for the more or less, you can't. That's one thing you can't do is your work clothes, unless you get a mask. Like this year, I got mask with the Scentsy logo on it. I wrote those off I'm going to, because that was specific to Scentsy.
Specific.
Ooh, so yeah. So speaking of that, I love it. If any of you have, I love Etsy. There's this girl, it's 12, the number 12 eyes embroidery. And she made me one of those. It looks like a North Face, like black jacket, and has like embroidered the Scentsy logo on one side and then my name on the other side. She embroidered it in there, and I can write that off because it's Scentsy branded business stuff. So like I got masks too. Like, Oh, Kat got one too. Kat got one of the jackets too, because I wore it, or I don't know if I wore it or I sent you a picture of it, Kat, but I was like, you guys need to do this. Look at how cute this is. And it was like, it's perfect. I wear it everywhere because it's not too flashy, but yet you see the Scentsy, and everyone has to wear masks. So why not have a Scentsy mask?
Yep.
There you go. Yeah.
I'm sorry, I'm a little confused. So if I bought a Scentsy hoodie, that is not a tax write-off, or it is?
That is.
Yes.
Okay. Sorry. Thank
you.
Branded clothing. Here, my shirt that I'm going to work with, you can't write that off.
But anything branded,
you would write that off under advertising.
Okay, so as long as it's Scentsy branded?
Branded.
Okay, thank you.
With either Scentsy, it has to have like the Scentsy logo, or you like your scented name or website or something on it that is like branded to your business.
Okay, so even like the Wax Boss hoodies there, because they're Scentsy related?
Yeah. If you've got, yeah, if you've got your logo and stuff
Because
on
you
it.
wouldn't buy them if you weren't a Scentsy consultant. It's
No.
helping you promote your business. So
Yeah.
you can absolutely write that as a tax write-off. Like I have this ring light. I could write this ring light off because I use it for when I'm doing meetings, so I'm better lit. Boom, that's a price. If you go to buy envelopes from the post office, that's a write-off if you're sending them off and sharing them with customers. Postage stamps. Postage stamps, yes.
Your cup with the logo
Thank
on
you.
it.
Yes, my cup with the logo on it. I mean, anything that you're going to be using for your business, even if like you might borrow an envelope to send something else down there, you're primarily buying it for your business. So you say at that Dollar General receipt or wherever you're getting them from. If you get stuff off at Avery, if you're buying Avery labels, say all of that, all of that. I mean, you really like think about what you're using for your business because you can absolutely write this off to save yourself some money.
That goes with that too. If you print the labels at home yourself, you can write off your printer cartridge too, your ink
And paper you buy.
and paper. Yeah.
Yeah, I only use my printer for Scentsy stuff. So everything that comes out of that printer is business write-off. What else was I going to say? What were we just talking about before that?
Branding, logo
Clothing,
stuff.
branding.
This puppy is just driving me to drink here.
You can
So
bring her to my house. I will take her.
I will ship her in a crate tomorrow morning for you with lots
I
of
live
holes in it.
closer.
So
I will
she'll-
take her. Bring her over. She's
chewing on my electric blanket.
Oh, she's a baby.
I'm like, get off the blanket, but she keeps like chewing on it, and I'm trying to
Did you
keep
get her?
going.
Did you get her those nylon?
This girl has probably, I'm not kidding you, 30 toys in her basket, and she would rather chew on my arm.
I live
Oh.
closer. I'll meet you halfway.
Try maybe the nylon bones. She might like.
Oh, she loves she loves all the toys. Like she's just a
I might have
crazy
to
girl.
babysit or puppy sit.
Yeah, anytime you can. Everybody can come take her. She's
Has the novelty worn off for Holden, I'm assuming?
oh yeah. The
Oh,
novelty's
fast.
gone the first day, the first week.
Oh,
It was
geez.
just kind of like gonzoed. I lost my train of thought. It will come back to me.
Anybody else having any questions? Things that you don't be afraid. If you don't want to mute if you want to stay on mute, you don't have to show your face. Ask a question. If you want to type it out. If you think of it tomorrow, I'm going to have this posted at some point tomorrow, and you can ask in the comments and I'll tag Gina. Ask away,
Can you
guys.
send like me or Molly like a direct message on the chat so nobody else can see it but us.
But honestly, if you're thinking it, someone else probably is too, and this is the time to ask
Oh,
while we have
I'm-
everybody right here now.
I remember. I even write off my Audible subscription each month because every book that I read I don't have a lot of time in life, but all the books that I read are all self-help, improvement, business, goal-orientated books. So that's all a write-off. So you have to think about it like even your Amazon Prime every single month, because I get all my business supplies through Amazon Prime. That's a write-off, including everything that they're shipping to me.
Your Photify, your Canva, anything you use.
Mhm.
My Mad Mimi, your Visly every month, things like that you use. Write them off.
Yeah.
Write it off, write it off, write it off.
The worst thing that's going to happen, like, and you could probably comment on this, but like your tax lady man is going to say, no, sorry, that's not considered a write-off. Like it's better to go in with more than less because you don't want to owe money. You want the government to pay you that dollar because you worked hard for it.
Yeah, and that's also, I have some people that'll come in and like, again, I'm just throwing, it's like, I can see it on my end and I'm like, don't worry about pushing anymore. You're okay. You're not owing blah, blah, blah. And they're like, oh, but I got another receipt for $550 at the house. And this is what I say. We don't absolutely need it. If you're ever in an audit, that's counterbalance for you in a positive. So it's not, I mean, not saying you don't have every dime, but if it's something that you're absolutely, forgetting and like, oh, and then you're like, I just kind of want to finish my taxes, just go ahead and finish it if you're in a positive, because it'll just be no, you cannot put it on the next year. It's everything is present year.
Yep. So anything that you've spent since January 1st, guess what? You're starting over.
Yeah.
It's not Scentsy calendar year, it's calendar year. So
yeah.
Is there anything you're allowed to carry over till the next year?
It's just if you depreciate stuff is the only thing.
Okay. So you couldn't take your charity receipts if you forgot to put them in and use them the next year?
No.
Okay.
Nope. It's only the present year.
Okay.
Present year, which the receipt accrued.
Okay.
Unless you paid for a taxed reassessment, right? Is that?
Oh,
well, yeah, then you would still be doing that year, just the year after. But yeah, it'd still be that year's receipts.
Oh, you mean the amendment?
Yeah.
Yeah. It would only, I don't know what Canada, but US is it called an amendment, and it would be still for the present tax year receipts.
Okay. And there's also, like, I don't know if people are in school and stuff, but your tuitions depreciate, or able to go on to the next year also, is it not?
Not that it's able to go on to the next year. It's the year that it was paid, you're able to write it off for a certain percentage.
Okay.
But that's based on income. And that is based on the government also, because that is one, like my daughter, it's the first year, she's out of college, graduated out of school. And so she's paying all her loans and she's like, oh, I get to write it off. And I went, that you can't this year. Why? They're not allowing it. And she's like, what? And so they swap that back and forth all the time. Where I almost positive this year that there's going to be nothing on it. Well, there might be tuition, but there won't be interest because nobody paid interest for the last year and a half.
Right.
So
COVID.
yeah. So
if you're not sure, definitely ask one of your professionals.
Yeah.
If you're curious, because you don't want to get dinged. And it could be different where you live. There's going to be different state stuff. There's going to be different
Federal is federal for the whole entire US, but state, there could be something credited for federal for your business that, like California allows a renter's credit. You can't get that on your business, but you can get it on your state. So that's something, if you're trying to do your own and are in different states, and where there's state taxes, you double check on that. So that's one thing that people don't realize also, that states have their own personal credits.
Are you from the States or are you from Canada?
I'm from the state. I live in Washington State.
Oh, nice. I didn't know.
Allison, she stated earlier that she used to work and do Canadian taxes for like 15 years ago. So
get out. Okay.
Yeah, I did Canadian taxes and it just got too much for me. And I had to say, no more training for that. You're on your own.
Yeah. Yeah, it can get complicated.
I still do have a couple people that, I mean, I have 20-year-old, not 20-year-old, but clients that have been here 20 years and they live in Georgia, all over the United States that I do taxes for. And I do have a couple that have moved to Canada. And so they've got dual citizenship. And I've just said, I just can't no more because it was too hard to keep up with the both.
Mm-hmm.
Well, and they change a lot year to year.
Yeah.
Another question. This is a Canadian tax question though. So I pay a lot of tax. Like I advertise across Canada. So like my advertising bill last year was $70,000. That was just my Google AdWords. So I write off a lot because I spend a lot. But when does the government usually say we want your taxes quarterly, where they won't take it in a lump sum from me anymore? They haven't done that yet, but they sent one letter to me meandering about it.
I can't answer that. I can't answer that for Canadian. I know for federal would be if you're owing quite a bit year after year. Mm-hmm. They could, and I actually about 3 years ago, they started doing this. They could, if you're on a W-2 also, claim the maximum, so you have the maximum taken out, or make you pay estimated tax payments.
And is that because they make interest on the money? Is that why they want it
No.
quarterly?
No, it's just because they want to get paid.
Okay.
And that's one thing that I can say. It's a lot of people say, oh, I got to file my taxes because I don't want, I don't want the IRS making money off of my money. They actually don't start collecting the interest or doing interest until a year later. So for 2021, they're not going to start. So if you don't file right now, they're not collecting money on your money. Does that make sense?
Yeah.
People have that of the government taking your money, et cetera, et cetera. But I have seen where the IRS has, and what they actually do is they put a stint on there that you have to file your taxes on time. You have to have your estimated tax payments on time. You have to claim, the maximum withheld on a W-2, and you have to do that for 5 years consecutively. If not, there's huge penalties and fines from the IRS. And again, I do have a couple clients that they're excited they're out of that 5-year plan, and they're back to the routine of they do have enough taken out. They're not owing thousands and thousands every year, but it's just something where the IRS has implemented, so they started getting their money.
It's tough with Scentsy because they don't take any tax. You're like a consultant.
You're sole proprietorship.
Yeah. So that's tough when it comes to, and then I do have a full-time, I took a year off work to see how I liked not working, but I have a full-time government job. So it was like, you never pay enough taxes, right? So.
That's just it. It just, you kind of, I don't know how to say it. If you claim zero and single on a W-2,
mm-hmm.
not married, if you claim zero and single, it don't matter if you make $20 or $300,000, you're not going to owe the IRS. You're not going to get a big refund, but you will not owe. But if you implement that income plus sole proprietorship income or self-employment income,
mm-hmm.
and you didn't pay any quarterly taxes, then yes, you could owe.
Gotcha.
And that's one thing, like Molly was saying, you have your separate accounts to where, like on my end, well, obviously, because I've got a structure for for the tax business, but for Scentsy, I withhold 18% for taxes specifically. Even though when I do taxes, I'm ahead, so I get money back from my checking account. But in the long run, if I needed it, it is right there, and I'm not trying to have to fish it for another 3 or 4 months down the road to try to come up with all that money.
And when you have two different businesses like that, how do you differentiate like the write-offs that overlap each other? Like, well, I guess you don't. I guess your tax business wouldn't be in your house like your Scentsy business, but when people have like two different businesses that are sole proprietorships, how do they differentiate the receipts on two different businesses? They're filed separately.
You would have to know. Like, did this receipt go to my cleaning business or did this go to my Scentsy?
No. So the person would know, but how do you tell the IRA that? Like, how do you tell?
When you do your taxes, you would do 2 Schedule Cs.
Okay, so you do them separately.
Mm-hmm.
Okay, that's what I meant. Sorry.
And
okay.
See, I'm not afraid to say this. So when I first bought the business, I was stupidly, and I would say that, I am going to say that, I didn't change the structure. I just did it as sole proprietorship because it was not that it was brand new to me, but I just took it and went with it and was kind of lost for a little bit. And when I did taxes, I did 2 Schedule Cs, but obviously, because I have nothing at all at home regarding my tax office. My cell phone is not even linked to my tax office because when I leave here, I leave here. Nobody can contact me. And so, knowing on that, obviously when I went and bought paper, I knew, okay, that was for the office, not for Scentsy, kind of thing. And then now, obviously now I've restructured. I've got an S Corp now, which is a bigger thing.
Is that,
there's a lot more stuff to do.
Corporation, like side to corporate. Oh, is that the same thing as like in Canada, you decide to corporate?
Yeah,
Okay,
my tax business is incorporated.
gotcha. Which I do know some Scentsy reps that do that, that they get so big that they make so much money, they end up turning it into a corporate so they're not paying as much taxes.
Yeah, yeah.
Yeah, they do like an LLC, right?
No,
Yes.
an
No.
LLC, because you can still have an LLC and be sole proprietorship,
Yeah.
Okay.
but LLC with an S corp, because on a sole proprietorship, all your money goes to self-employment. On an S corp or C corp, only a portion of that goes to self-employment. The rest comes across as like a dividend. So you actually save a lot of money.
You don't really touch your money. Well, I mean, you do, but you don't. It goes in there and there's a portion.
Your money is more controlled, even though it's yours, it's more controlled. You can't just left and right it. You've got to have proof on every dime on a corporation.
The thing that doing that in Canada was that you, with the corporation, you have to file taxes more than once a year. It's like, there's quite a thing
Well,
to
yeah,
it.
that's your business. So I have to file quarterly also through the state.
Yeah.
For the tax thing. And so I do have to do, it's called business and occupation tax. So I have that to do too, but not through Scentsy because that's sole proprietorship.
Gotcha.
And to an extent, Scentsy pays all those taxes anyhow.
Mhm.
Right.
And I do want to say for all of you who have earned a trip or are on their way to earning their first trip, Scentsy is awesome because they don't do that as a bonus. If they were to do it as a bonus, we would get taxed 40% on that, but they send it to us as a gift. So we don't pay near as much tax on what we would pay on these like incentives that they give us. So we are
Except when they pay
blessed.
us out. Except when they pay us out.
Even when they pay us out, they put it as a gift.
No, well, I get it. Mine isn't a gift. Like when I get it, I get that separate saying it was cash, but it also counts as my total income.
I think
But you don't have to put it in as a bonus. If you had to put it in as a bonus, that's when they would give it to you as 40%, but you write it as a gift.
Okay. So, sorry. So on RT4, I think it comes up, it's like box 22. It says,
bonus and awards or something.
Bonus and awards, cash awards and bonuses. But I still like that Holland trip. That was $14,000 was the payout on that.
I think in Canada too, I think the percentage is a lot different too.
Oh, okay. Cause like that would be great if I don't, because I always say that that's income for me. So that'd be great if that's a big mistake if I've been doing it and counting as income. If
Definitely
I didn't have to.
talk to someone up there.
Yeah, it's still considered income, but it's the structure of it coming to you.
Okay.
It's the way that they word it that makes it so like my husband gets bonuses, like big bonuses from his business, but then he gets taxed at 40% on them. So really he's getting like almost like a little more than half of what he's actually been gifted. And with Scentsy changing the verbiage on it and just like when they put it in their way, it helps their business out a whole bunch, but it also helps our business out because then we aren't paying like an exorbitant amount. So that $14,000, you didn't have to pay the government $7,000 of that, you know?
Huh. I'm going to have to look into that.
Definitely. It's
okay.
awesome. Yeah. That was one thing I learned after, what was it? Which one was it? I think it was after California because I didn't take the Mediterranean trip. I took Reunion. And if you took Reunion, they would give you like, it was like $2,500, you know, it was like $2,000. And I was talking to my friend who's very, very money minded. And she was like, oh yeah, because they put that as a gift. We don't have to pay a ton on that. I'm like, sweet. All right.
Good to know.
Yeah.
I'll have to look in Canada how that works.
All right, we are coming up on our time here. Oh, go ahead.
Let me know what you find out, Allison.
I will for sure.
At the end of the day, when
I think it does go under a specific box on the computer system, so it does come out. I'll find out how much it is, but maybe that's why it doesn't go under income. It does go under awards and gifts so that we pay a less, they don't tax us as much for it.
Mhm.
So pretty much the moral of this training here is
Stay
when in
organized.
doubt, go to a tax professional
Oh
because
God, yeah.
they know exactly where to put the numbers and make sure you get the most bang for your buck and the most write-off that you can possibly obtain to get your
Right.
income down.
And just be careful to the language they use too. Because like I say, I live in a small town and there is 6, 7 tax offices here. H&R Block's right around the corner from me, but I have people that come over and like, oh, they told me I couldn't write it off, but it's not necessarily that you couldn't write it off. It's just, it's not doing anything for you.
It didn't help you.
Yeah.
And
Yeah.
I'm so
Because I
sorry.
do-
Going back to the Audible, if you use it half for personal and half for business, do you write that off as 50% instead of 100%?
Yeah.
Okay, thank you.
So if you're paying $10 a month, you just write $5 a month.
Okay, yeah, because I use it for my 2 kids and then I use it for Scentsy books. So I'm just like, oh,
Mm-hmm. Or where, like, let's say that book was 1 credit, just record how many credits and what you're spending on it. So I mean, because I
Okay,
know
thank you.
like you get 1 or 2 credits a month or something like that. So yeah.
I think one thing, especially for girls just starting out, it's really good to keep your receipts because you'd be surprised how many times you whip into the dollar store to grab a couple things. And they might be little things, but that all adds up when you're just starting out for write-offs. It's really good. Like even when I first started as a single mom doing Scentsy many years ago, I would always get $1,000 back just on my return with Scentsy. Again, I was a single mom too, but you would be surprised the stuff you can write off. But it's the little things that you forget to keep, like your Tim Horton receipt when you're out delivering. And again, the dollar store you run in to get, you're constantly here. Oh, I need some gift bags, or I need a little thank you card, or I need this. Keep those, get some kind of thing in your car that every time you get in your car, you stick those receipts somewhere, because if you're not organized, you're going to lose money out in the long run.
Yep,
Yeah.
like you just showed us, get one of those thin, accordion files. You can put
accordion.
that right between your seats and just
Mhm.
and that's how I started it out. I had a file for, receipts for food. I had a file for receipts
Mhm.
for, whatever supplies, blah, blah, blah. And then, every couple of weeks, take them out of there and bring them inside and
Enter them.
put them in there.
Yeah.
And that's one thing too, even like the receipts, yeah, your pile's gonna be a little big. If you do the business use at home, you technically have to have all your receipts for your power for all year. You've got to have those too to have proof.
Mhm.
You can get really little ones at the dollar store.
Yeah, like the coupon, it's like the coupon size. This one that I have right here it's just a bigger with a 13. Yeah, well, it's not
Cute.
but with the for my tax office. And again, this little thing I can fit, well, I have since 2017 in one little file space, compared to big Apple boxes of just numerous receipts and everything like that. So,
And this little one has 13 slots as well. So
yeah. And like some of my pages in here, they might have 4 to 6 copies of the receipts on them too. So the paper to where you have one page of 6 receipts rather than a pile of the receipts. But yeah, that's the biggest thing that I just keep track of everything.
Mm-hmm. And the best way that works for you. I was always losing receipts. So for me, paying that $7 for the Intuit is huge, because otherwise I was like, shit, where'd I put that Dollar General receipt? I know I just needed anything for envelopes, but I want to get paid back on it. So, finding out what works for you and going with that. I used to try to writing down my miles did not work.
The mileage too. The mileage is a big, just whatever is the easier for you, whether it be an app, a little calendar, or in the car, you have a calendar and you put an X, but you just kind of have to go back to, know where you went that day.
You have to record those miles for that day. I was so bad at it, guys. I had a clipboard in my car where I was trying to write down. And I was good for like the first 2 weeks of the year. And then after that, it was just like,
I'm done.
shit. Okay. So then I would look at how many miles I drove for the whole year and I'd be like, probably half of that was Scentsy, and, just guesstimated it. But having this system where my IQ or, QuickBooks, I don't have to turn it on. It just automatically records my drives. So that way I just go back.
Write those kilometer apps off.
And then you can write that off too. So, I mean,
All
whatever
good.
works for you. There's
Whatever
lots of
works
different
for
ways.
you, and the best thing is just to stay organized. I mean, I can honestly admit, even for a tax office, knowing all the things, I have a filing cabinet sitting behind me, and I've got to go through that. I did really good in the first couple of months where all the utility goes in the utility, all this, and now I have a huge thing that now I have to go through, which I'm going to have time here in a day or two. But monthly, if you just go monthly and add up your things, paper clip them, set them aside, you're done with that month. So that way at the end of the year, you just have to add up 12 numbers rather than 100 receipts.
Yeah.
And this also might be a very silly question, but I'm just going for my G1 to like help benefit my business. That won't be a tax write-off though, would it?
I'm not sure what that is.
Oh, a
Oh, wow.
G1 in Canada is
Your learner's
a license.
permit.
Is your license, your driver's license.
No, that's
Yeah.
not a tax write-off.
No, I didn't think so. Okay, thank you.
Hey, worth a shot to ask, right?
But
Yeah.
your passport is, though, if you have to
If you
travel
travel.
for business.
Okay.
And if you use your vehicle, isn't your like your little stickers and your plate and all that kind of
Mm-mm.
stuff for?
So I'm not sure in Canada. In the US, you used to be able to write off your tabs and stuff like that, but you cannot no more.
I think you can in Canada still.
Yeah.
Well, hey, definitely ask and make sure. All right. Any last questions so we can let Gina go have some dinner and enjoy the rest of her evening? I know she jumped
an
on right after
appointment
she was
here.
done with work. So, all right. Well, if you do have questions, add them on the team pages and we will get them to her. And yeah, I think that's everything. Thank you so much for taking time to sit and chat with us. This was fabulous. This is something we've been
Thank you.
wanting for a
Welcome.
while.
Thank
So
you so much.
Yeah, I really appreciate it. Thank
Yeah,
you.
if there's like I
Thank
say, any
you.
questions, don't hesitate to ask. It may take me a day or two to get back to you, but
as we know, she's going to be busy until probably May.
Oh, yeah.
yeah.
So, all right. Well, thank you so much, sweetie. Tell Corbin I said hi. I'll
I
just
will.
message her too, because,
I will.
Moses. And yeah, we'll see you all next week. I believe Allison is in charge next week, and I forget what you're talking about.
I'm
but-
doing is my mute on? No, I'm doing awards and promotions.
All righty.
We're going to talk about every award you can get and all your different promotions. We'll go through all the levels.
Woohoo. All right. Have a great night, everybody. We'll see you next week.
Bye, guys.
Bye.